Hey folks, welcome back to Whiteboard Invest. Today we're diving into some highlight crypto news and exploring how these updates might sway different coin prices in the market. First off, why's the market taking a dip today? Next up, let's peek into the Solana community. Meanwhile, memecoins are flexing their dominance. Oh, and just a friendly reminder, we put in a lot of effort into our daily research to save you from the hassle of collecting and sifting through useful news in the market. So stick around till the end to stay informed and sharpen your research skills. Let's jump into the details right away. All right, let's break this down. The MEMECOINS situation is definitely a big deal. Moving $5 billion worth of Bitcoin is like dropping a boulder in a pond. It's going to cause ripples. This move understandably spooked investors, leading to a market-wide bearish sentiment. Historically, large transactions like this can create uncertainty because people start speculating about why the move happened and what it might mean for the future. The drop in the total crypto market cap by $45 billion is significant, but not catastrophic. We're still holding at $248 trillion near a crucial support level. If we dip below $250 trillion, it could signal further declines, but it's not a given. Market sentiment can change quickly, especially in the volatile crypto space. Bitcoin losing support at $68,500 is concerning but not a death sentence. This support level is key for short-term recovery. If we can reclaim it, we might see some renewed optimism. If not, and if market conditions remain bearish, we could see Bitcoin heading towards $66,000. However, remember that crypto markets are notoriously unpredictable, and sentiment can shift rapidly. Lido DAO's recent price action shows how quickly things can change. It was on a nice upward trajectory in May but got caught in the bearish wave from the broader market. It failed to break the 2.6 resistance and slipped to 2.4. If we don't see a bullish push soon, it might continue to drop to 2.2. In my opinion, this situation underscores the importance of being vigilant and adaptable in crypto investing. Large transactions, like the one from MEMECOINS, can have outsized impacts on the market. It's essential to keep an eye on critical support and resistance levels and to stay informed about major market movements and news. Next up, the anticipation around spot Ethereum ETFs is palpable, and it's clear that industry experts are feeling optimistic. Nate Geraci and Eric Balchunas are pointing towards a potentially swift approval process, thanks to the heavy lifting already done with spot Bitcoin ETFs and Ethereum futures ETFs. This groundwork could indeed make the SEC's job easier and speed up the approval process. However, it's important to keep in mind James Seifert's insights. The approval of the 19B4 filings is a significant step, but the S1 form approval is another crucial hurdle. This additional layer of regulatory scrutiny means we might still have a bit of a wait ahead of us, weeks to months, as Seifert notes. The broader optimism in the industry is a good sign. The dialogue between Geraci and Balchunas reflects a shared belief that the market is moving in the right direction and that these ETFs will soon be a reality. This optimism is likely buoying the market, even as we wait for official approval. For investors, this means keeping a close eye on regulatory updates. The potential launch of spot Ethereum ETFs could be a game changer, providing more opportunities for investment and potentially driving up the price of ETH. Speaking of which, ETH is currently trading at 3,860, a level that might look very different once these ETFs hit the market. So, while we wait for the SEC's decision, staying informed and prepared for rapid changes is key. Oh, by the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. All right, let's break this down. Solana is facing some critical moments right now. Trading at $167, it's hovering near the lower support line of its ascending channel, which has been holding since the start of the month. This recent drop started on May 20th, and we've seen a 7% decrease over the past week. Solana began its uptrend on April 30th at $129 and managed to climb to $184 by May 20th. However, after hitting that peak, selling pressure has kicked in. Now, SOL is flirting with its 20-day EMA, and if it falls below this average, it could signal a shift from a bullish to a bearish trend. The 20-day EMA is a key indicator, and breaking below it means sellers are gaining the upper hand. The MEMECOIN indicator also supports this bearish outlook. The MEMECOIN line crossing below the signal line is a classic bearish signal, suggesting that the momentum is shifting towards the downside. Traders often see this as a cue to exit long positions and consider short positions. In the futures market, there's been a noticeable decline in open interest since May 20th, down by 4% to $2.44 billion. This decline indicates that many traders are closing their positions, likely due to the recent price drop. However, despite this, the funding rate remains positive, which means that some traders are still betting on a price increase, potentially keeping some buying pressure alive. Looking ahead, if SOL breaks below the $163 support level, we might see it drop further to around $157.99. On the flip side, if the positive sentiment from the futures market holds, we could see a bounce back up to $172.41. In summary, Solana is at a crucial juncture. The technical indicators and futures market data suggest we could see further downside if support levels don't hold. However, the positive funding rate offers a glimmer of hope for a rebound. And, according to Cointelegraph, the Solana community recently made a big decision to allocate all priority fees to validators, which passed with a strong 77% majority. This move shifts away from the previous split, where fees were divided between rewarding validators and burning tokens. Solana has seen impressive price gains, peaking at $210 in March 2024 and currently trading around $171. This shows strong market performance, but it's not without its challenges. The network has been plagued by congestion and multiple crashes. For instance, back in September 2021, the network went down for 17 hours due to bot activity. Similar issues occurred in December 2021 and again in 2023, often linked to high traffic and software upgrade problems. Despite these setbacks, Solana's developers have been working on bug fixes and overhauls to enhance network stability. However, they haven't completely ruled out future crashes, which is a bit concerning. On the flip side, Solana's transaction throughput is phenomenal. The network reached a record 1,504 transactions per second, TPS, in April 2024, making it the fastest blockchain out there, far outpacing Ethereum's Layer 1 speed. So, what's the takeaway? The decision to allocate all priority fees to validators aims to bolster network reliability by incentivizing validators more effectively. This could help mitigate some of the congestion and stability issues. However, the network's history of crashes suggests that while the move is a step in the right direction, there's still a lot of work to be done. Speaking of chainlink, the token is seeing a remarkable rise, up over 10% in just a day, trading at $18.75. This makes it the standout performer among the top 40 cryptocurrencies, which is particularly impressive given the quiet market due to Memorial Day in the US. A major driver behind this surge is Chainlink's collaboration with Swift. They're set to co-present at the Consensus Conference, highlighting how traditional financial systems can integrate with blockchain technology. This partnership, which began last fall, is proving to be a significant milestone for both Chainlink and the broader blockchain community. Adding to the optimism is the recent approval of Ethereum ETFs. Sergey Nazarov, Chainlink's co-founder, sees this as the start of a trend where not only Bitcoin and Ethereum, but many other tokens will eventually get their own ETFs. This would open up the crypto market to a vast pool of global capital, which is a very bullish signal. Chainlink is also making significant strides across multiple blockchains, including Ethereum, Arbitrum, Polygon, and Base. Their technology was recently used in a pilot by the DTCC, involving heavyweights like JP Morgan and BNY Mellon. This pilot, called Smart Nav, aims to make mutual fund data available on public networks, showcasing Chainlink's potential to revolutionize financial data transfer. Furthermore, 21 Shares, a crypto investment firm, recently highlighted Chainlink in their research newsletter, praising its role in enabling over $10 trillion in transactions across 22 networks. This kind of recognition from industry leaders underscores Chainlink's growing influence and adoption. However, it's worth noting that despite these gains, Link is still far from its all-time high of $52.70 set in 2021. This means there's still plenty of room for growth, especially if these positive developments continue. Overall, Chainlink is on a roll with its collaborations, technological advancements, and growing industry recognition. While it's experiencing a strong price surge, the token has the potential for even more significant gains if it continues on this trajectory. Finally, we have the surge of memecoins in the crypto market, as highlighted in the paper, reflects the ongoing frenzy and speculative interest in these assets. It's fascinating to see how quickly memecoins like Pepe and Dogecoin have risen in popularity, securing top spots in OI charts alongside major cryptocurrencies like Bitcoin and Ethereum. However, the fact that funding rates for meme coins remain negative despite their rising OI and prices raises some concerns. Negative funding rates typically indicate a bearish sentiment among traders, suggesting that many are betting against these assets. This could signal potential volatility and risks associated with memecoins, despite their current popularity. While memecoins may offer the potential for high returns, their speculative nature and the bearish sentiment reflected in negative funding rates could lead to increased volatility and unpredictability in the market. You, my friends, should carefully assess your risk tolerance and investment goals before diving into memecoins. It's essential to conduct thorough research, stay informed about market trends, and be prepared for rapid shifts in sentiment. Additionally, diversifying your portfolio with a mix of assets, including more established cryptocurrencies like Bitcoin and Ethereum, can help mitigate risks associated with investing in memecoins.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.